Hey, what's going on, guys? It's your boy Freddy. Welcome back to the channel. It's been quite some time since I've given an update video on my WealthSimple dividend portfolio, so I thought it was only right to make a video letting you guys know what's been going on with my portfolio and also to unveil my new dividend portfolio tracker that I've been working on for quite some time. Before we get into all of that, I first wanted to update you guys on what's been going on in the markets. Firstly, the small cap market continues to remain choppy as it struggles to get past its February levels. Meanwhile, large cap companies and the broader market as a whole continue to just rip through to new all-time highs seemingly every single day. In just the last 2.5 months, the S&P 500 has grown over 8% and the Nasdaq has grown almost 9%. Given that I love index funds and these two holdings make up a massive portion of my portfolio, I couldn't be happier with what I'm seeing in the markets. Let's take a look at my WealthSimple dividend portfolio and see how my portfolio stacked up against the broader market. It is really cool to see that although I have a large portion of my position in high dividend paying stocks, that we've been able to closely match the broader market. Over time, of course, the goal is to beat the market, but given how hard that is to do, I would be more than happy to simply match the market and also have a large portion in dividend paying stocks, giving me a solid stream of income on a regular basis. Looking at the all-time graph on WealthSimple, we can see that we're starting to see a substantial separation between our portfolio value and our net deposits that we have contributed. As we spend more and more time in the market, I hope to continue to see a larger and larger separation between the net deposits and the portfolio value. This is due to the money already deposited continuing to compound, and it is really amazing to see that we're starting to see the first leaf of the fruitful plant starting to grow. The Canadian average minimum wage across the country is about $13.50. Looking at our 1 year growth, we can see that we are up about $2,400, or the equivalent of working 176 hours for minimum wage. So for simply buying and holding my investments, we can see that our money is putting in major work for us without us having to do any major thinking other than the initial starting process. Of course, this type of crazy growth shouldn't be expected every year in the market. Regardless, I'm very happy with the trajectory of the portfolio and will continue to research very solid companies to add into the portfolio. Let's take a look at the new portfolio and dividend tracker to give us some more in-depth information regarding our WealthSimple holdings. Over the last few months, I've shown some rougher versions of the portfolio tracker and have been working very hard to come out with a tracker that I believe can be used by basically everyone, regardless of your proficiency in Excel and Google Sheets. It has taken a lot of effort to make this tracker as easy to use, and there are still minor tweaks and corrections that need to be made before it's ready to be released. I will have an entire video dedicated to showcasing how to use the portfolio tracker that goes in depth into all of the features and options, so stay tuned for that. Getting into the portfolio, this first page shows us all of the holdings that I currently have within WealthSimple. This page is very useful and I hope it will add a lot of value, as in one spot you can have access to all of the information regarding your holdings. Here you can see your share count, cost basis, daily change, profit and loss, as well as an entire section dedicated to showcasing dividend information like the dividend per share yield and even the total annual payout that you can expect from the company given your current position, which is very cool to see. Getting into my current holdings, the first ticker here is VFV, which is the S&P 500 index fund. This is probably my favorite but also most boring holding that I currently invest in. VFV is an amazing position to hold as it gives you exposure to over 500 US companies, including the biggest names in the world, including Apple, Google, Amazon, Tesla, and many other amazing profitable companies. I honestly believe that simply holding VFV or any major index fund like VEQT or XEQT will likely put you on a fast track to retirement. For me personally, I prefer VFV over these other indexes as I'm a big fan that it is exposed to only US stocks. I have a long-term time horizon before I look to draw down on my portfolio, and I believe that the US economy offers the best risk to reward ratio for me. Don't get me wrong though, depending on your risk tolerance and how much diversity that you're looking for, one of these other ETFs could be an amazing option as it gives you exposure to emerging and Canadian markets. One of the first videos on my channel is dedicated to showcasing different ETFs. It is an amazing video to get you introduced and started with the world of ETFs and showcases some of the biggest names out there, so make sure to check that out if you're new to investing and are looking into getting into ETFs. QQC is the other index fund in my portfolio. This ETF gives you exposure to the top tech companies and has about 100 holdings. Just these two holdings make up almost exactly 50% of my overall portfolio, and this is right where I'm trying to be. I want the index funds to be the backbone of the portfolio and have some of these individual stocks give exposure to either higher growth potential or more dividend income. Taking a look at the dividend side of the portfolio, the biggest dividend holding for me is Bank of Nova Scotia. This is a super solid and predictable company that will hopefully continue to offer me some excellent dividend returns. You can see here that it has a dividend yield of about 4.6%, which is just phenomenal. And there's some news brewing that BNS and basically all of the Canadian banks may be increasing their dividends here soon, which would be just amazing to see. I'm going to be adding just a few shares here to BNS over this next month, as although their growth may be limited compared to some other companies, the dividend return and just the overall safety of the company is something that keeps making me come back for more. I've been looking to add to Telus as well over these last few months and was just waiting for a pullback, which unfortunately never came. The stock has been ripping through to new all-time highs almost every single day, and I really wish that I added more to the position early on because I definitely could have seen more gains. Nonetheless, for me, it was a great learning opportunity that if I am confident in a company, I should look to add more rather than waiting to see what transpires. I want to double or triple my position in this company over the rest of the year, as I want to get the stock to a point where the dividends that I receive every quarter pay for the purchase of another stock of the company. When this happens, I can sort of turn on the autopilot of my investing into this specific company, as I've done all of the research early on, and of course I would continue to sort of look passively, watch the news of the company, things like that, to see if anything is changing and adjust my position accordingly. For now though, the dividend performance that the company offers, as well as this overall growth and fundamentals, are very enticing and I'll for sure look to add in the near future. The final stock that I want to go over today is CNR, as over the last few days it has absolutely exploded. In just a few days it has gone up 15%, which is just nuts. The reason for this insane gain is that the Surface Transportation Board, which is the regulatory commission, has raised concerns and has said that it wouldn't support the deal to acquire Kansas City Southern, which is a rail company that would allow CNR to have railways that span from Canada and the US all the way through to Mexico. They say that the deal undermines public interest. The stock actually shot up on this news as the general investing community that looks into CNR believe that they are way overpaying for Kansas City Southern, and the deal falling through is actually better for the company as it would otherwise stretch them pretty thin. In my personal opinion, I'm actually for the company acquiring KCS, as railways are a hot commodity and creating new railways requires years of public inquiries, votes, and approvals, and that's before even building the dang thing. Furthermore, KCS allows Canadian National Railways to have rails through Canada, the US, and Mexico, which in the long run will be extremely valuable for the company. Next up here, I want to show you the visual section of the Dividend Tracker. Here we have some amazing information regarding the portfolio, and it definitely helps to be able to visualize different aspects of the portfolio to get more depth regarding your holdings. First off, I want to go over the summary section on this page, and more specifically the dividend summary. Overall, I have received $159 in dividends and currently have a monthly average of almost $20 in dividends. Our current annual amount, if there was no additions or changes, would be $238. The overall yield of the portfolio is 1.92%, which means that for every $100 that goes into the portfolio, roughly $1.92 will come back to me in the form of dividends. Given that I have a long-term time horizon and that I want to have more of a focus towards growth, I wouldn't want this to be more than about 2%. Taking a look at the dividend growth chart, we can see that overall we do have an uptrend in dividends, but it is pretty sporadic. This is because I only have one company that pays me monthly dividends right now, and that's Ryocan. All of the other companies in my portfolio that pay dividends do so quarterly. This just means that some months I only receive a few dollars in dividends, but other months like this July we received over $50 as the dividends received lined up for a few companies, which is really amazing to see. Looking at the industry breakdown of the portfolio, we can see that I have almost a 50% allocated towards ETFs, and the next high sector is financials at 15%. I definitely want to increase my exposure to real estate and want to get this to about 5 to 7.5% of the portfolio, as I see a lot of growth potential, especially over the next few years as we exit the pandemic. On my watch list for this week is of course my general 1 share of VFE that I try to get every week, 1 share of BNS as I want to increase my position slightly before the next round of dividends are announced, and I'll also be looking to add about 2 to 4 shares into Ryocan as I work to build out this position as well. Well, that has been the update to my WealthSimple dividend portfolio. For sure, let me know what you guys think in the comments down below. Also remember to keep an eye out for that video showcasing the dividend tracker that will go over it fully in detail, showcasing every feature and option. If you enjoyed, remember to hit that like button down below, as it really does help the channel to grow, and also consider subscribing for more investing videos like this to come. Take care.